What's up, everybody? It's the Common Sense Investor coming at you with another video. And in this video, we're going to talk about the EMA strategies, how it works, why it works, when do you use it, and what happens if it goes wrong on you, okay? Because today in the Discord, one person was asking concerning how to use the EMA strategies. And so I was explaining to them that basically, in a nutshell, it works like this. If your price action is above your first EMA, which in my case I used the 8 EMA, then it's bullish. And if your price action is above your 8 EMA and your 8 EMA is above your 20 EMA, then you're twice as bullish, okay? And when the price action is above all 3 of your EMAs, you're riding that motherfucker all the way to the moon, okay? That's how the strategy is supposed to work. And it works in reverse also. Looking at the QQQ, which is the complete opposite or the inverse of the SQQQ, we see that the price action is below the 8 EMA and the price action is below the 8 EMA and the 20 EMA and the 100 EMA. So it's going to be bullish because it's running downwards below your EMA lines, okay? Now, in my case, I like to use the white, the red, and the green to separate them, all right? Now, real quick, how are they calculated? The white line, which is my 8 EMA, you'll see I got this blue box here. That is 8 bars from here, 8 bars. And what happens is there's a mathematical formula. I'm not a mathematician. I just know that what they do is they take these 8 bars, they add in the price actions, and then the baseline becomes 2034 for the 8 EMA. That's telling you that's what the price should be, all right? And then when you use the 20 EMA, which is right here, you can click on that and drag it over here. And that's your 20 EMA, all right? 20 bars. They add up the price actions. They come up with a solution, and they tell you that, okay, according to the 20 bars, your price should be 2027. And the same thing with 100, okay? Scroll on down a little bit so I can grab it. And we bring it on up here, and you'll see that from here to the end is 200 bars. So if you're running a 200 EMA, you're counting in all of this price action from the rip up and everything. I use the 100. And now I'm only counting in these bars. That's 99. That's close enough. But I'm only counting in the price action for these bars, all right? And it's telling me that the price action for these bars for 100 candles should be $20.10. That's what each of these lines represent. The price should be this if you want to count 8 bars. The price should be that if you count 20. The price should be that if you count the price action of all 100 candles. Okay? So now, you have that understanding. We can get rid of these so we can see the lines themselves. So as we were talking about it, the person said, well, what about SQQ right now? And so looking at the chart at that time, I said, okay, SQQ had just came below all 3 of the EMAs. And I said, if the next bar closes below the EMAs, then that means you should buy a put. That's according to the rules. Now, I looked up on option strats to find out just how far my move needed to go, and I found out that I needed it to go to at least 1975, okay, for me to make 15% profit. From here to here would have been 15% profit, and I said, we'll take that. But instead, it didn't. It broke the trend, and it went back up. At somewhere around here, you could have set your stop loss, and you would have probably lost about $15, all right? But me, I'm an aggressive gambler, and the person that I was talking to said she was too, and she wanted to hold for a little while, so she held. Now, I'm watching it, and I see it get right here to my red dashed line. And you say, what's your red dashed line, CSI? My red dashed line on my charts mean pre-market high and low. So when the stock ran up and it hit that pre-market low, I really was anticipating it to fall back down and come back to 1976, and I would make the profit off of it. But it didn't. It broke into the pre-market section from this morning, and it wanted to continue going up. So if you were going to buy a call to offset your put, this would have been your entry point, because it was the candle that closed above the EMAs right there. So you would have said, I would have got that as a call. Okay, now you got puts down here and calls up here, and you're going to ride it on up. Now you're going to see, what does it do? Does it fall back down and you puts start making money, or do you ride it on up? And sure enough, it continues on up, because according to the rule of the EMAs, whenever it's above that, you're not supposed to sell. You're supposed to continue to hold, continue to hold, continue to hold. All right, until it breaks below it. But I don't wait for that bullshit. I got a whole separate rule. But it gets up here, and you're making a shit ton off these calls, and you decide to sell. Because why? Why would you want to sell right here? Because this is your pre-market high, and I'm expecting it to fall back from its pre-market high. And I'm also noticing something else. I'm noticing that the stock price is way up here. Your EMA, first EMA is right there, and your 100 EMA is way down here. Now, one of the rules of the EMA is eventually the stock's price is going to want to pull back to the 200 or the 100 base, all right, which is exactly what it did. But you would have bought a call right here if you would have just went with the rules of the EMA, and you would have had a nice little run up right there. You could have sold it somewhere right here, anticipating it to bounce back. But if I would have sold my call right here, believing that it was going to bounce, well, then I would have turned around and bought more puts, bringing my average up to here, so that when it fell back, I could have made a profit off of that too. And that's exactly what we did. I turned a $417 loss from yesterday, from holding it from yesterday, to a $123 gain today, using exactly this strategy, people. So what's your main takeaway from this video? Very simple. The EMAs are very, very important indicators for your entry and your exit points. Trust them, listen to them, do what they tell you to do, and you will be a successful trader, because the EMA strategies are right more often than they're wrong. You have to learn how to handle your risk management if you're going to be successful. Like I said earlier, you could have sold out right here with your stop loss, but then your EMA strategy would have told you to get your next set of calls right here, and you would have made money on the way up. So it would have offset your losses, and you would have still had a gain. All right? And understanding that the next strategy is your pre-market highs and lows, you can figure that it's going to bounce off of this and come back down and get to your 100 EMA, and that's exactly what it done. And we turned a major loss into a good win today. So with that, I hope there was a little bit that I was able to teach y'all in this video on how I trade. All right, now I'm not a financial advisor. This is not financial advice. I learn this shit day to day just like you. So with that, love y'all, be blessed, and I'll see you in the next video.